So a few months ago, I did a video on the top ETFs to buy in Canada, and it performed really, really well. I figured that I'd do somewhat of a follow-up video, but today focusing in on dividend ETFs or income-related ETFs. The exact same concept will apply as last video, where these are funds that I think you could buy and hold for years and years and years to come. Of course, all of the same benefits will apply, whether that's the diversification aspect, buying a basket that owns hundreds or thousands of different assets. These are, of course, low-cost solutions. We're going to talk about the fees and costs related to every fund. And of course, you benefit from the passive investing management style. Just being a passive investor, not having to go out and research and pick and analyze individual companies. You can buy a broad basket of investments, and it really is a peace of mind, a piece of lifestyle strategy where you own 1, 2, maybe 3 funds and you have your bases covered. It's a very, very easy way to go about it. One quick message before we dive into the video. I'm very excited to announce in a couple of weeks, I will personally be interviewing a Canadian legend, ex-Dragon Den best-selling author, The Wealthy Barber. It's going to be a completely free session to attend. I would love to see you guys there. But let's kick it off today with fund number 1. It is the Vanguard FTSE, Canadian High Dividend Yield ETF. The ticker you'd be looking at is VDY. This is one of the most popular dividend options amongst the Canadian market. And in fact, even amongst the Vanguard family, we see $3.1 billion in net assets. This makes it one of their more popular funds flat out. Today, we're seeing a yield of 4.41%. And if we were to just compare that to the broader Canadian market, so just look at the TSX, the Toronto Stock Exchange Index, the dividend yield on that today is sitting at about 2.76%. Of course, this is a fund that is honing in or focusing in on the higher dividend payers, hence the higher yield. In fact, to break down the holdings, what we're looking at today is a fund consisting of 54 stocks. You're gonna recognize these big Canadian names. We see in the top 10, Royal Bank, TD Bank, Enbridge, CNR, BMO, the Bank of Nova Scotia, CIBC, Manulife, Suncor, TC Energy. In terms of the sector exposure, as I'm going through that list, you might have been able to expect, this fund is heavily exposed to the financials and energy sector with pretty much negligible exposure to any of the other major sectors. And that's one thing I would say is maybe to be aware about. That's not a bad thing. It's just something to be aware about when we understand what we own, is that you are going to be skewed to these sectors. And depending on what the rest of your portfolio looks like, maybe that's something you take into consideration in terms of the overlap. To take a look at the yield today, we're looking at a monthly frequency, meaning you're going to be earning dividends or distributions, payouts on a monthly basis. Trailing yield, as I talked about, 4.41%. The yield itself is 3.91. And the MER, the cost for this fund, because ETFs do come with a cost, minimal cost, marginal cost, but this one does charge an MER of 0.22%. What that means for anybody very new is that for every $100 you invest in this fund, you're going to be paying 22 cents per year in fees. Obviously, you can scale that number up as you go bigger dollar values, but a very, very marginal cost in my opinion. Now, jumping straight into fund number 2, let's not waste any time for this video. I'm going to throw a bit of a curveball at you guys. It's the Schwab US Dividend Equity ETF. The ticker here is SCHD. And why do I consider this a curveball? Well, this is a US listed ETF. It's very important to understand that. And to clarify what I mean by that, maybe for our beginners out there, those who are just getting into the ETF or investing scene, the first fund we covered, VDY, the Vanguard product, that is a Canadian listed product. It trades on a Canadian exchange and it trades in Canadian dollars. SCHD trades on a US exchange. It's a US listed product, and importantly, it trades in US dollars. Now, if you've been following the channel for a while now, you might already be thinking what I'm thinking, or at least trying to, getting to the point that I'm trying to get to here, which is that a fund like this may be a very suitable hold for the RRSP, the Registered Retirement Savings Plan, simply because the dividends in this fund are exempt from withholding tax. We've done many videos on this topic in the past, so I'm not going to bore our regular viewers, but of course, do your own research, do your own due diligence, just a thought or idea. But the objective of this fund in particular, this fund's goal is to track to the extent reasonably possible before fees and expectations, the total return of the Dow Jones US Dividend 100 Index, an index focusing essentially on US dividend stocks. The current yield today is sitting at 3.55%. And if we were to dive into the holdings of this basket or this fund, we're gonna see a very different breakdown. This fund holds a total of 103 holdings, with the top holdings today being companies like BlackRock, Cisco, Chevron, Bristol Myers, Home Depot, Verizon's, Texas Instruments, UPS, Altria, and Lockheed Martin. What we notice here is a much more diverse sector breakdown, completely more diverse compared to the previous one, with just essentially two, major Canadian sector exposures. Here we get a pretty even split across all of your major sectors, but financials, healthcare, and consumer staples do come in at the top three. And one thing that I'll note or like to point out with this fund, as you may or may not have noticed, it's not the highest yielding fund out there. Like, the dividend yield is not overly high. You can certainly find funds that have a much higher yield if that's what you're prioritizing at the moment. But one thing that I love here is when we look at the companies included, the quality of stocks represented here, in my opinion, are top tier. And in fact, what you'll notice is that a lot of these stocks are what I would consider dividend growth companies. So again, the yields may be smaller, but they're actively growing that dividend. They're increasing their dividends year after year after year. You are mixing that up with some stocks like the Altrias of the world that have the higher starting yield. You're essentially getting a really nice basket, a diverse mix of some of the top US dividend paying companies out there, which is why I think this is a very well-rounded fund to consider, to hold for years and years to come. Just an FYI, not that it's overly relevant, but this fund did underwent a stock split quite recently. Effective October 10th, this ETF went under a 3-to-1 share split. This, again, doesn't really impact you, but just in case as you're doing your research and due diligence, you see some numbers that are, maybe not perfectly matching up. That's why. From a cost perspective, this fund has an expense ratio of 0.06, and it has been an awesome performer since its inception back in 2011. I personally am a big fan of this fund just in general. I think it's an awesome hold for those dividend lovers out there, but I do want to just clarify, keep in mind, this one does trade in USD. Okay? So everyone's situation is going to be different. You need to make that assessment based on yourself, whether it warrants possibly paying conversion funds, or maybe you have USD, what account you're investing in. Those are all the decisions you can make. In general, I do think this could be a really good hold in the RSP, and of course, getting exposure to the US market. If you guys aren't already on the Blossom app, for those that don't know, I am one of the co-founders of this app. We're building a social network specifically for investors. It's completely free to download and try out. We're coming up on 200,000 users, and especially for those that have an interest or passion in ETFs, within the Blossom community, ETFs are our most followed topic, which is crazy to see out there when you think about communities like Wall Street Bets and certain communities on Twitter, which are very short-term focused. Blossom is like the polar opposite of that, with interest in ETFs, dividends, passive income. One of the really cool features is you can see a list of the most bought ETFs amongst the community, amongst the members, and get a ton of ideas. Of course, one of the other major cool aspects about Blossom, is you can actually see what other people are actually investing in. It's a whole transparent community. You can see what I own. You can follow me at the username Brandon. There's probably a link down in the description below for you guys to check it out, or just go to the App Store and check it out. Search up Blossom Social. I would love for you guys to check it out. I really think you'd like it, but let's move on into fund number 3. The third fund that I've selected for today's video is the BMO Equal Weight REITs Index ETF. The ticker on this guy is ZRE, and I wanted to finish off with a little more variety. I wanted to give a scatter of options because we've covered a Canadian fund, we've covered an American fund, and in my honest opinion, the Canadian dividend space, like if you're looking at the various options, they're very, very similar to each other. Whether you're going with Vanguard or iShares or BMO, the Canadian market at the end of the day is quite small and quite concentrated. You're pretty much going to invest in your big Canadian banks, your insurance companies, the Manulife, Sun Life, yada, yada, yada. Your energy companies, they're kind of just going to be rinse and repeat polar copies of themselves. So I didn't figure there'd be a whole lot of value just giving a few different provider options. I thought we'd switch it up. And although not technically dividends, like owning dividend stocks, this is an ETF that owns a basket of REITs, or real estate investment trusts, which own real estate projects, real estate related assets. Essentially, real estate is the name of the game. And we're looking at a yield today of just shy of 5%. What I mean by that, for those that aren't familiar with REITs, if we jump into the holdings, is we see this fund owns 22 holdings, essentially a variety of different REITs. You may not recognize all of these names, but I'll rip through them. We have ones like Chartwell Retirement Residences, Slate REIT, Allied Properties, Artis REIT, Primaris REIT, BSR, First Capital REIT, Granite REIT, Canadian Tire REIT, RioCan sitting at the top 10. And what's unique about this fund in particular is that it is equally weighted. Take a look at the weightings amongst this fund. They're roughly coming in at about 4 to 5% apiece. And this is very much a strategy of playing the field. Rather than picking one particular REIT that focuses on this or that, you're essentially playing the broader Canadian REIT space. Now, each of these REITs would have their own specific specialty. They may focus in on office spaces. They may focus in on healthcare buildings, residential. But in general, ZRE from a high level, basically looking at all the components within this fund, you're looking at an exposure to about 40% retail, 27% multifamily residential, 10% diversified, about 5% healthcare facilities, and then you see offices, healthcare, and industrials coming in a smaller weighting. Again, this would be 100% weighted to Canada. And as the investor, you could go in and dive into each REIT individually to really get a sense of what you understand. Do I think that's overly necessary? Of course, I want you guys to do your own due diligence and I want you guys to do your own research, but I do also want to keep it real with you guys. I don't think you need to understand the nuance of every component of this fund. In my opinion, I mean, do your own research and due diligence, but the idea here is for someone that's looking for just more so general real estate exposure, general exposure to REITs, especially with this equal weighted nature. And like I said, kind of the playing the field approach. I think this is a fund that would be very suitable for that. But in terms of the distributions, they pay about 9 cents per share. This as well pays on a monthly frequency. You're earning passive income every month. And as mentioned, you're sitting at a yield close to 5% today. The MER on this one is the highest on our list, sitting at 0.61%, meaning you'd pay 61 cents in fees per year for every $100 you invest. But those right there are my selection today for the top dividend or dividend related income focused ETFs. Again, the REITs, depends on what you classify that as. It's still an income generating ETF, which very much may fall into that family of what a dividend investor is interested in. Those are my selections today. Now, if you guys are interested in a video on high income, I wouldn't consider any of these, by the way, high income. For the real passive income or high income junkies, I wouldn't consider these ones there. I think these are just for, great options for long-term investors, people who do skew to more of the dividend approach. If you're interested in a video on the high ones, definitely let me know down in the comment section below. That could be the next logical follow-up to kind of get the whole series of options for you guys. But that'll wrap it up for today's video, guys. As mentioned, I would love to see you guys at the Wealthy Barber interview. Come out, show some support. That would be awesome. Of course, follow me on Blossom. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.